So what I wanted us to do for today, before we get started on the remaining of Learning Unit 4 and question 4.12, which you guys had to read through, we're just going to look at the key things that you had to see on question 4.5, which we discussed in class last week. So let me just... Okay, so last week we were busy with posting your cash journals, and we didn't get to how you post it to your GL or your trial balance. But what I'll do is I'll do an exercise and then load it up for you guys to practice this concept, or we can do it in Learning Unit 5 as well, because it's exactly the same principle. Doesn't matter which journal you're looking at. Now, just to recap the journals, you'll remember there are 8 journals in our accounting system. Now, 3 of them are your cash journals, which relates to Learning Unit 4, which is your cash book receipts journal, your cash book payments, and your petty cash journals. Then you also have your debtors journals, your debtors allowance journal, creditors journals, creditors allowance journals. Those are your credit journals, which we will touch on today for Learning Unit 5. And then you've got your general journal. That is basically your additional journal, which doesn't fit. So any transaction which doesn't fit either into your cash or your credit journals. Okay, so you can't hear me. Okay, just show me a thumbs up if you can hear me, so that I just know that I'm okay. Okay, so just to get back to the journal, so your general journal, and that we will discuss later on as we continue with the learning units. Your general journal is basically any sundry transactions which does not belong in your cash journals or your credit journals. So that's anything that doesn't have to do with sales or purchases or payments will generally go into your general journal. So when we get there, you'll see a lot of those type of transactions would be writing off of bad debts. Additional interest that was charged on an account would be accounted for there. If we give any settlement discounts, you would account for it there so that you could balance your debtors or creditors accounts at the end of the day. Okay, so let's move on then. Just one thing I want you guys to remember is that the receipts from your debtors and the payments to your creditors, you will always record it in your cash journal. You do not show it in your creditor or your debtors journals. That will still go into your cash journal because it is a physical cash payment or cash receipt. So that's just very important to remember, because a lot of students last year did that incorrectly. Okay, so just to recap on the structure we did in class, that analysis of receipt, that is only the receipts that you physically receive in the store. Okay, so the money you received in the store would be shown in the analysis of receipt. Then in that bank column, we will only show the money that was physically taken to the bank and put into our bank. Now, as you can remember from class last week, that would be money that's directly deposited into the bank, would not have an analysis of receipts like shown on the second line item. And then the fourth line item where we had the 56,000. That was a combination of day 4 and day 5's analysis of receipts that was received in the store, but we only went and banked it on the 5th. Okay, so that is important to remember how to use those two columns. Now that analysis of receipt column is only in your cash book receipts journal. It's not in your cash book payments journal. And then remember your sales amount is always excluding that. And then you use that column to work out your cost of sales and then using the markup percentage. So remember cost of sales is always excluding that as well. So that was just the main things that you had to take from last week's class. And for the general ledger, so these accounts, remember your account name is always at the top. You debit everything on the left, you credit everything on the right. And then we spoke about how you actually balance it. And then remember the reference number is your folio number. So that's your subsidiary journal. So whether it's a cash book receipt journal, whether it's a debtors journal, that needs to be completed within that account. Okay, and then we just said balancing, depending on how many amounts you have in that C account, will determine how you balance the account. So that was just important to remember as well. And then you take the biggest side to get the totals at the bottom, and then the balance would help you total to that amount, which it should be. Okay, and remember that the balance carried down is on the side which doesn't have enough money to get to the total, and then the balance brought down is then the opening balance for the following month. Okay, so let's quickly look at question 4.8, the key points that I wanted you guys just to see from what we discussed last week. Now, the first one was, in the question, they told you we had a cash sale. The markup on cost was 25%, and they gave you the sales value. Now, remember that sales value is inclusive of that. Now, how we work out what the percentage is that we're going to apply, you remember we're going to say, if it's on cost, cost is always 100, profit is 25, so our sales price would have been 125. You had to do that little small calculation on your question so that when you do the journal, you could actually do the calculation correctly. Okay, so this was the solution in your textbooks. So how we worked out the cost of sales on line item 3, you would see we took the 19,217. So that was the sales value excluding that. And we multiplied with, we wanted to work out what is the cost price. So we want to know what's the 100%. And we divided by the 125 because we're taking the sales amount, which is 125%. And that's how you got to the 15,373 Rand. Okay, then the next transaction, also on the 22nd, our markup was also on cost and it was 33.33%. So you apply exactly the same principle that you've applied for the previous transaction and you do the calculation exactly the same. Then on the 31st, they said you received interest on your bank statement. So this is where the bank actually now gives you interest and they say, okay, there were money in your account, you're getting interest for the money you've kept in your account. This transaction appears on your bank statement. You don't physically receive the cash in your store, so you receive it on your bank statement, and that's why there's not an analysis of receipts amount, and then it's just recorded in the bank account. This amount, interest, is exempt supply for VAT purposes, and that's why there was no VAT in that column. So I just wanted to highlight that in case you were wondering why there was no VAT on that transaction. Now, if we look at the cash book payments, on the other hand, that's now where we physically made payments. The first one was on the 17th, which was we purchased the kettle for staff use. Now, I said when we buy something for staff use, it is seen as entertainment, and that is non-allowable for VAT deduction. Then a donation to the Red Cross is also exempt VAT supply. Donations are exempt from VAT. And then your lunch with clients is also seen as an entertainment and also non-allowable VAT deduction. So you would see for those transactions, the VAT amount would have been 0. Okay, for the other ones, there was input VAT that you could claim. It's just for the ones that relate to entertainment or specifically that is excluded from VAT will have no VAT component. Then on the petty cash journal, what you had to see there is petrol for Frank Freskin's private vehicle. Because it's for his own personal use, it is seen as a drawing. So it's money he's physically taking out of the business. And for drawings, we're not allowed to claim the input VAT because it's a personal use. It's not for businesses. So SARS only allows input VAT deduction when it is for a business deduction. Okay, so that's just important to note as well. And then tea and coffee for your staff room. We said staff use is entertainment. It's non-allowable, similar to your cash book payments. And then they said you bought 2 paper reams, but one was for the owner's own use, which is again a drawings, it's personal use. Okay, so for those three, you would see because it's drawings, there's no VAT implication. Because it was for entertainment purposes, staff refreshments, we do not have VAT on that transaction. And then the one where there were 2 paper reams, you would see half of it went to drawings. So only half of it would have VAT on it. Oh, I didn't do that calculation. So this VAT 3.26 would have been based on 25 Rand and not the 50. Okay, so that's just the key things I wanted you to take out of question 4.8. Before I move on to today's things, do you guys have any questions on that specific question you had for homework? So I'm just going to repeat, do you guys have any questions on question 4.8 that you were wondering about, so I can just address it before we move on? Okay, so we've got a question, which column is excluding VAT between sales and cost of sales? I lost that. Okay, so both sales as well as cost of sales is excluding VAT. Let me just move back to that slide for you. Okay, there's quite a few slides. Okay, so for sales, remember sales is what you physically sold to a customer. Now, in your books, you show it excluding VAT because the VAT component you have to pay over to SARS. So we show what is our sales excluding the portion that we owe SARS. In your bank is the sales amount that you physically receive as well as the VAT that you've collected on behalf of SARS. So that's how you get to the bank amount. Now, your cost of sales is based on your sales value, which has no VAT in it. So therefore, your cost of sale also does not have VAT in it. So both columns is excluding VAT. Okay, does that answer your question? Okay, great. Is there any other questions on question 4.8? Okay, if you don't have any other questions, then let's move on to question 4.12. So in my textbook's on page 131, so it should be on page 134 or 135 in the new textbook. You can just type in the chat function on which page that question is. Okay, so on page 135, thank you. Okay, so question 4.12 has now a different layout to the one we've done in class. So the one in class, they went and they summarized it nicely in tables for you to just fill in the information. Now question 4.12 also has a table, but now it's got the descriptions are a bit more in writing. So what they've done here is they've gone and listed all the transactions for the month. But what we need to look at is what do we actually have to work out. So if we move on to the required on page 136, then it says use the relevant transactions from those given above to complete the cash book payments of Maxi's suppliers. So they're only asking for the cash book payment. They don't want to know about the cash book receipts or your creditors or your debtors. They only want to see the cash book payment. So what will generally happen is they will give you a whole range of transactions in there, and you need to be able to identify what relates to a payment specifically. Then the next paragraph or the next sentence they take, make use of columns headings for document number, day, name of payee, bank, creditors control, input VAT, trading inventory, and sundries. So they basically telling you which headings to use in your journal specifically for your cash book payments. Now, in your test or in your exam, these headings would be given to you, but in your textbook, because they want you to learn how to do the structure and how to actually set it out, they provide you with that information. Now, let's page back to page 135. Now, important information, I've highlighted it on this slide that you had to highlight when you read through the information, is you are the bookkeeper of Maxi Supplies. The business is a registered VAT vendor, so you had to see it's a registered VAT vendor and trades only with registered VAT vendors. Now, remember when we said when they tell you that, that means you will be able to claim the input VAT when you purchase something because of the fact that you trade with VAT vendors. The business charges 15% VAT on all it sells, so we know VAT is 15%. All amounts are inclusive of VAT. So they've told you that all the amounts are inclusive of VAT, which means when you fill in columns that are exclusive of VAT, we have to first take out the VAT component. And then, as the bookkeeper, you have been provided with only the source documents for the month of April. Okay, so we're doing April's journals to prepare the journals, and the business uses perpetual inventory system. Okay, so you can tell me, where do we account for the inventory if we use a perpetual inventory system? Where do we book the inventory? To what account? If we think accounting equation, in what category would we include the inventory that we've purchased if we use a perpetual inventory account? You can just document it in the chat function for me. So just to recap, in Learning Unit 2, we said we have two types of inventory systems. We've got perpetual, we've got periodic. Now one goes to an asset account, one goes to an expense account. Now the one in this question, does it go to the asset account or does it go to the expense account? Okay, so we've got assets question mark, we've got assets. Okay, so remember perpetual always goes to assets, periodic goes to expenses. And then for perpetual, once we've taken it to the assets, when we sell it, so only when we sell it, do we move it to the expense account. Okay, so that is the difference that you need to be made aware of. And then they told you that inventory is marked up on 60% on cost price before giving any trading discounts. Okay, so the two things you had to see there is your markup is on cost price. So that means our cost is 100, profit is 60, and our sales price would be 160. Okay, so just to repeat that, that means cost price is 100, our profit is 60, and that means our sales price is 160. Okay. But why is it important that they tell us before trading discounts? When we do the question, you'll see they provide discounts to supply, or suppliers have provided us with discounts. If you take the discount into consideration, you'll get to a different amount. So that's why they clearly state it's before trade discounts, that you work it out before you take the discount into consideration. Otherwise, you will work out the incorrect value. Okay, so let's quickly have a look at the page. I've scanned it in here just so that those that don't have a textbook can also follow. So on the top, that's the paragraph we've just read. I've highlighted what you should have seen when you do a test. So you highlight what is important. You'll see there's a lot of information I actually haven't indicated anything on because it's not relevant. I don't need to know what that information is. It's not going to help me complete the question. Then in the columns, I've only highlighted for today's class just the main things where students go wrong. So I haven't done each and every transaction. So it's just specific things which students struggle with. So for example, the second one where we say we drew a cash check from petty cash. When we drew a cash check from petty cash, that means I am actually depositing a check at the bank. I'm giving them a check and I'm taking the money out of the bank account. Okay, so it's just a different way of saying that I've cashed a check and taken the money. Then on the next one, we've made a payment to Alfie suppliers, but they tell you there's no settlement discount. So they've given you all the balance at the beginning and all of that. Now, generally, that information is important when you've got a full payment, or they tell you you settle your account in full, because then you have to go work out what is your current balance. But because we've only partially settled it, they gave you the amount that was paid. So that in that column, that information is actually additional information that's not relevant in assisting you to complete that account. Then on the 11th, we've purchased trading inventory. Then on the 13th, they tell you we purchased trading inventory, but there was a trade discount of 10%. So they give you the value before trade discount. And if you missed that these trade discounts, you would actually work it out incorrectly. So when we get there, we'll look at how you calculate it. Then on the 14th, you'll see they said you cash purchase of pens, and then in brackets they tell you as postage and stationery. Now, if they do that in the question, that is generally the account name that you have to use in your journals. Okay, so in this case, they've given you the account names in brackets so that you use the correct account name. An alternative way of doing it in a test is they will just put it in writing that it's equipment or inventory, and then you have to apply that account name. Then on the 18th, we purchased the PlayStation. Now, a PlayStation is a no sense related to a business. So it's not for business use, that is personal use. And you had to see that when we look at the VAT component. Because it's personal use, you will not be able, or staff entertainment, you will not be able to claim the input VAT for that. And then we've got your settlement account. So on the 20th, there they tell you get a 5% settlement discount. So you get a discount for paying early, and there all that information with your opening balance, your purchases, and your closing balance is important, or the returns is important to work out what is your balance at that specific date. So you'll see they've given you a question mark. They haven't told you what the amount is because you have to go work it out. Okay, and the rest of the transactions are normal transactions. So I'm going to open Excel, and then we're going to start completing these transactions. If you do not have a textbook, maybe just take a snap or picture of the screen so that you have it. So I'm just going to give you a few seconds to take a photo if you do not have a textbook. Okay, so I'm just going to share the Excel screen now. Okay, you guys should see the Excel on your screen. Can you just, in the chat function, just give me a thumbs up if you can see it? Okay, great. So what I've done so far, just to make up some time in class today, is I've already filled in the document number, the date, the name of the supplier or the payee, and the bank amount where they've given the amounts already. So I filled in that information just so that we can make up a bit of time and make it a bit faster. Okay, so if we go to the transaction on the 4th. So in that question, they tell us that we made a payment for business printing consumables, which was printer paper. Okay, so we know we paid 1,039 rand and 31 cents. So that's included in the bank account. But where will the remaining, which two columns will we use to account for the paper we have, the printing consumables? So where will I fill in the rest of the transaction? What's the first column? Okay, so let me just repeat that. You can just type in the chat function. Okay, so I've already completed the bank account. Now we said when we do double entry, whatever's on the one side needs to be on the other side. So we're crediting our bank now because we're physically paying that 1,039 rand. Now what am I going to debit? Which two accounts will I debit to make sure that transaction is complete? Okay, so Tomato says consumables and VAT inputs. Okay, so Tomato, you're on the right track. Just remember the consumables. In this case, they've told you it's printer paper. So they've given you an account name, but it would be consumables if they did not give you the account name. Okay, so how we work it out, we take, let me just make this back. So as you can see the amount. Okay, and then the calculation. So what I did is I took the 1,039 Rand for the input VAT. We multiplied with 15 because I want to work out the VAT component. I put the 15 at the top and I divided by 115 because we said the bank amount is inclusive of VAT. So let's just say, put it in here just so that you can remember that, oh, that it's inclusive of VAT. So that's how we got to the VAT input. Now then, to get to the printing paper, we just take what was in the bank and we subtract the VAT that we have claimed, so input VAT, and then we get to the 933. Or alternatively, you could take the bank amount multiplied with 100 over 115 and you would get to the same thing. Now, instead of consumables in this question, we would have taken it to printer paper because of the fact that that is the name that they have given us in our question. Okay, so then on the 8th, we drew a cash check for petty cash of 3,012 Rand and 51 cents. Okay, so if that amount, where the other side of the transaction go to which account? Where will we take it to? Where will we take the other side to in this transaction? So if I credit bank, so our bank account is becoming less because I took the money for petty cash. Where do I take the other side of the entry? To what account? Okay, to petty cash. That's correct. So because there's no petty cash column, we then include it into our sundry account to petty cash. Okay, so petty cash increases. We debit petty cash, more money goes into our petty cash box, but money goes out of our bank account. Then on the 9th, so we've got Alfie Suppliers, a payment on account to Alfie Suppliers. No settlement discount was received because the account was not paid in full. So they told us we paid 21,000. Now when you pay a supplier's account, where do we take that money to? What account will be debited? So we've credited bank with 21,099 Rand and 60 cents. What account will we now debit? Okay, so Tomato says creditors control. That's correct. Now remember, creditors control, just to explain this to you, creditors control is a grouping of all your creditor accounts together. So that's why we call it creditors control. It is the balance of all your individual creditors put into one account. Okay, just for accounting purposes. But then when you look at the individual creditor accounts, there would be individual balances, and then if you add all of those together, it should agree to what's in your creditors control. So that's why this column is creditors control and not only creditor. Okay, because it's more than one creditor. Then on the 11th, we've purchased trading inventory of 36,782 Rand. Okay. Now, where do we take the contra account? So we've credited bank, we've taken the money out of the bank. Now, what do we need to debit if we purchase inventory? Okay, so if we buy inventory, what are the accounting entries? So we've already got the bank one, so we've already credited bank. What two accounts do we need to debit? Okay, so Tumelo says trading inventory and VAT input, and then Mapaledi thinks cost of sales and sales. Okay, so remember we said on the perpetual inventory system, when we buy inventory, we take it to our asset account. So for that reason, we are taking it to trading inventory, which is our asset account. Okay, if it was periodic, Mapeleli, then we would have taken it to the cost of sales or our purchases account, which is the name in the periodic system. And the sales account we would only do once we sell it. So you don't do cost of sales and sales at the same time unless you are busy with the perpetual inventory system and you sell it. What's wrong? Can you just tell me what's wrong with the guest link so I can just. Is it kicking you out or what's happening?